This week, I'm joined by Prashant Mohan, who is the CMO at a company called Sharesight. So Sharesight is an award-winning online investment portfolio tracking software used by over 150,000 investors and finance professionals in 100 plus countries. Prashant, I'm excited to have you here. Welcome to today's show.
Thanks so much, Dylan. I'm excited as well, and thank you for having me on your show.
Oh, no worries. I'm really looking forward to it. So today we're going to be talking specifically about what you and the team have done, some of the experiments that you've run over the last year or so that have helped increase your free trial to paying customer conversion rate a little over 3%, I believe it was. So before we get into some of those specific tactics and talking about what kind of impact that's had on bottom line for the business and what you've implemented, it'd be really great if you could share with everyone listening a little bit of an overview into Sharesight and where you guys are at. So as I mentioned, an online investment portfolio tracking SaaS used by over 150,000 investors. Maybe you could give someone listening to this a top level insight as to like size of the business, what your marketing team looks like, etc. I think that'd be a really great place to start.
Sure. Yeah. Thanks for the question, Dylan. And before we get into what Sharesight does, I'll start with a little bit of the backstory of the founding one. We were actually started by a father and son duo in Wellington in New Zealand. And as anyone who invests in the stock market would realize, that keeping track of your investments is really hard. Like you've got a bunch of stocks sitting somewhere, you've probably got some mutual funds, you've got some nowadays cryptocurrencies, and they're all lying all over the place. And the father, Tony Ryburn, actually had this massive spreadsheet into which he would make manual entries of every dividend that came by. And the son, Scott, was actually the techie guy, and he's still our CTO. And he came up with a solution saying, hey, maybe we could build something around this. And that's how Sharesight was born in Wellington. So fast forward, why does an investor need Sharesight? I'd like to call it in a simple way as like a Fitbit for your investing. So it collates all information relating to your finances, especially investing, stocks and foreign currency, cryptocurrency, all of it, and gives you a really good rational understanding of how your investments are tracking, all on a common denominator. And in terms of our teams, we are split across New Zealand and Australia primarily. All our tech team is actually based in Wellington in New Zealand. And a lot of us on the commercial side, which is basically marketing, partnership, and our CEO are all in Sydney. And we are a B2C SaaS company. And so it's pretty new in the area of fintech, which is where we play. So traditionally, the more traditional finance companies are in the wealth management space, who would be guided by financial advisors. And they have these complex products, which are usually only for institutional investors. We are trying to bring that to the everyday investor so that everyone gets a 360-degree understanding of their portfolio, how they're tracking towards their financial goals, and most importantly, understand all performances on a common denominator basis. And being a B2C SaaS company, we have the tech and the product teams, and we have marketing primarily. We don't have any sales, which is again a pretty unique side. We do have customer support, of course, and partnerships more to grow the B2B side of things.
Awesome. Yeah, thank you so much for sharing a good overview. I think that's really interesting for everyone listening. So I said in the intro that Sharesight is used by over 150,000 investors and finance professionals. I know that you have multiple tiers of pricing. There's a free plan. There's multiple different entry points. I'm not sure if you guys can share like exact revenue numbers, but could you give like an insight as to maybe roughly how many of those people are paying customers or some recent landmarks that you passed or something like that, so that everyone listening knows that you guys definitely aren't at like the super early stages. It's good to be making sure that everyone coming on the show sharing advice is coming from a spot where what they're sharing has proven to have a significant uplift on revenue and growth for the business.
Yeah, sure thing. So firstly, I think we've passed the early stage. We've proven the model and reasonably successfully. In terms of our kind of plans, we are a combination of freemium and free trial, so which is again a pretty unique combination. So Usually SaaS companies pick one way or the other. But again, the freemium part of it, which is you're able to track up to 10 holdings free for life, is actually an acquisition play for us, which means that most people, when they start out young in investing, they have less number of holdings. But as the number of holdings gets larger, then we step it up on a little value ladder and then present various plans to them. So we have 3 plans in terms of starter, investor, and expert. Obviously, expert is the gold standard of all the reports and the number of portfolios, as well as the number of holdings that you get. So there is a nice step up value ladder. And look at the average annual pricing for this sort of thing. We take the middle one, which is the investor plan, that comes to about 216 US dollars or about 275 Aussie dollars, and various combinations of those across multiple currencies in the world. Approximately about 10% of our total base are paying subscribers. And the other kind of unique story of our company is actually some of the funding that we've got. We went for a kind of funding in 2015, and that was pretty unique in the sense we went to our customer base and did an equity crowdfunding through our customer base. Now, obviously, back then the laws didn't allow to take money from anyone. So they had to prove that they were a sophisticated investor, but which was, again, unique in the sense that our customer base and our investor base are exactly the same. And we did another round of funding, again, through the same mechanism that we're going to announce shortly.
Yeah, that's super interesting. I know that you and I were talking about this a little bit in our kind of prep for the interview over the last few days. And it's interesting because I haven't heard of too many other like software companies take that approach. Yeah, that is really interesting. Good to hear that went well for you guys recently, especially given the current situation like in the world too. I really admire people who are raising any kind of funds right now. We have a couple of clients of ours who have just like closed deals during all this time. And I say, God, if raising funds is stressful anyway, raising them right now must have been the craziest experience for everyone. But let's get to today's core topic then. So we're going to be talking about some changes, tests, experiments that you guys ran to improve your trial to paying customer conversion rate by a little over 3%. Now, one thing I want to touch on before we get into that also is you mentioned towards the start of this interview how one interesting thing about you guys is that you have the freemium model, like you have the free for life plan, but you also have a free trial route as well. So when we're looking at these numbers and these tests and these experiments, was this purely focused on getting people into a trial for one of the paid plans, or was this focusing on converting people from the freemium to one of the paid plans, or was it like a combo of both? I'm interested to find that out before we dive into the tactics and the experiments that you guys ran.
Yeah, no, great question, Dylan. So this is about the ones that were coming into the free trial for one of the paid plans. And so just again, a bit of background, the number of features and reports within the paid plan have a free trial period. So that's what we're talking about. And to give a background on that, before story was we had a 30-day free trial period after you've already been a free for life user. And it presented some challenges in terms of planning, marketing, and also realizing cash. One of the good things about SaaS is like you get the cash way before revenue, which when I tell some of my other friends in other industries, they say, "Oh wow, that's really good." So cash flow usually precedes revenue, so which is why we all love SaaS. And if you have a 30-day free trial period, by the time you plan your marketing, you execute a campaign, and by the time revenue actually starts hitting from those campaigns, it's already about 30 days past, or in a lot of cases, even 45 days later. So that was a problem to me as a marketer. And we had this soul-searching question on whether freemium and free trial need to exist at the same time. And we had a really good, robust discussion, and we said, no, freemium is actually an acquisition strategy, so that's not going away anywhere. But within the free trial, let's design an experiment to try out different trial periods. Now, the hypothesis here was actually to nudge users who were starting this free trial to actually try out these features. And again, this is complete hypothesis we came up with, was that by the time a user tries out these new features, in the early days of these features and reports, there's a huge wow factor. Now, if you wait for them to try it out for 30 days, A, people are going to postpone trying this out. B, even if they've tried out early, they forget the wow factor, how they felt the first time they see this particular report or feature. So I said, okay, that's too late. So let's design a nice experiment. And so we sat down with our product team and basically designed 3 plan tracks, as we call it in our parlance. So we gave a 30-day free trial, a 14-day free trial, and a 7-day free trial. Now, to get sufficient sample size and decide which one was the winner, and obviously you can imagine the complications with regards to communication. So you send one cohort of people, hey, your free trial is going to expire in 30 days. So we had to do a lot of adjustments in even the free trial onboarding flow with regards to these different plan tracks. But what was fascinating through this experiment was, and again, like to share some results, our free trial to payer conversion was already about 78%. And
that's really high. Right? Are you collecting payment information when they start the trial? Yeah.
Yeah, you do. We do. Yeah.
That's still pretty high numbers though. Sorry for interrupting you. I just things like that. I'm like, oh, that's super interesting to me.
Yeah, exactly. So again, like we thought, okay, 78% is still pretty good, but is there? So it wasn't as much about increasing the percentage of free trial success as much as it was to bring forward the cash flow.
Got it.
And so we said, okay, our kind of measure of success was it should not go below existing baseline. That was, okay, if we don't go below 78% and we're getting cash much earlier, let's do that. Mm-hmm. And so we started out this experiment a month in, 2 months in. It was really fascinating. Our analyst actually set up this beautiful dashboard, and you could like refresh and see which one's winning. And we had a nice little gamification within the company. And a lot of people said, okay, of course this 30-day one is win. I mean, where does it say that if you reduce the time, you give something for free, it's going to actually increase, right? So most people bet on the 30-day free trial being the winner. And to our surprise, and that's the beauty of tests, right? You come at it from a pure data perspective. Early on, we saw that, okay, this is going to take quite some time to settle down. So we actually then saw that the 30-day and the 7-day were both leading. The 14-day one was starting to drop in terms of success rate. Now, multiple reasons why, like I mentioned, that initial wow factor. And in 14 days, maybe it's not long enough to try everything in the 30-day period. It's a different mindset shift versus the wow factor is already gone. So then we took out the 14-day test and then, okay, we put the 2-horse race and said, okay, let's do the 7-day and 30-day. And when we did that, again, like we saw this really beautiful improvement to actually 82%, so a good 4% increase towards a successful free trial. So eventually the 7-day trial won, and that's our standard offering right now.
Amazing. Let me ask you a couple of questions off the back of that I'm interested in. So a couple of things that you mentioned that I think are super important to anyone watching this, listening to this, when they're thinking about their kind of trial to paying customer conversion rate also is one thing that I'm always talking about too, is identifying, and I'm interested to ask you about this, but identifying the like sticky points. So the actions that someone will take within your software, within your product that you know are going to lead to a higher chance of them utilizing the product in the long term, a higher chance of them converting, trying to identify those points and doubling down on those to make sure that they get the best possible, whether it's introduction to them, onboarding to make sure they're using them properly, even setting them up for them. I think this is one thing that's really important. And that kind of ties into what you mentioned at the beginning, where you were saying that you feel like one of the reasons the 7-day trial performed better than the 30-day trial is because that there's that instant wow factor when they come in and use your product. And if you leave it 30 days after that wow, it's like a long time to almost forget about that experience that you've had. So I'm interested in the back end of what you guys are running and managing. Are you having triggered, whether it's triggered emails or follow-ups going out based on if they achieve certain things within the platform, then you're encouraging them to, like, how are you encouraging them, is the question, to make that move from the trial to the paid plan? Because I would guess that you can probably convert some of them from the trial plan to the paid plan before the trial's even finished if you're clever about the way that you approach that. And that's something that I don't see many people doing. So I'm interested if you guys have tested that kind of stuff too.
Yeah, again, that's a really good point. Actually, we haven't tested that. A lot of our onboarding happens on the front end of it, which is actually from the free plan to a free trial. That's where we've done lots of tests and nudges. We have this kind of plodding people to actually get their holdings in. So the first step is you get an empty account, and then you need to start putting the stocks you own, as an example, or like an FX you own, foreign currency that you own in. And then that starts to kick in. You actually start educating yourself on the value that you're getting out of this software. And the alternatives are basically either complete ignorance, or if you know that you have a problem, you would be doing this on a spreadsheet. So you're actually saving loads of time in not having to do that. And there's a certain level of automation that's involved. But a really good point in terms of nudging people to actually bring forward some of those triggers. We have done it in more recent times, but that's usually triggered by some sort of a deadline. But lots more to experiment on that front.
Yeah, that's actually that's an interesting point for us and some of our clients that we work with too, that I want to ask them, is because naturally we always have these either 14-day, 7-day or 30-day trials, and we wait for the customer to reach the end of that trial and then make their decision. But I am fascinated with, there's so many platforms and tools that people are using where we'll provide them value within those 7 days, and we'll know there'll be a certain inflection point. And I wonder why more people don't experiment with trying to get them onto a paid plan at that point. I guess it's like, you maybe don't have as much leverage. You need to show them why they would upgrade now rather than still get a few more free days. That's probably one of the areas. But that's something that's interesting to me, because, for example, if someone imports all of their investments and their trades into your platform, that's the first, by the sound of things, that's the first big box ticked, right? Once they've done, that's a really useful step. And then I'm sure there's probably one or two other triggers or actions within the software that once they've set that up, they're clearly going to see the value. I wonder what would happen if you had some kind of automation to follow up with them once they've hit those triggers, to say, hey, look, this is how much we've helped you already. This is the benefit of upgrading to a paid plan or something. I'd be interested to see a small experiment like that. Aside from the varying length of trial, 7, 14, 30 days, I know it sounds like that was an experiment that was run together at the same time. So there probably wasn't too many, or if any, variables between them. But was there anything that you noticed significantly different, or that you either have introduced since that original test that's working really well at continuing to either improve those rates or provide better, as you mentioned, obviously, cash flow coming through the business? Are there any other things that you've experimented with recently with regards to the trial and the sign-up flow that you think would be useful for people listening to this?
Yeah, that's again a great question. And the other thing that we experimented with was actually the pricing. And that's a more recent test. And again, we had monthly plans and annual plans. And obviously, as a SaaS business, we want annual plans, and we want churn to be low. And obviously, there's much lower chance of churn. And also, you're far more committed. And the third part is that cash. You're getting cash upfront for 12 months when revenue is going to be recognized over the 12-month period. So all really important things. Now, we had the baseline monthly pricing and baseline annual pricing. We had, if you upgraded to an annual plan, it was 11 times the monthly price. Okay. And again, we had this hypothesis that's not enough incentive to actually upgrade to an annual plan. And again, in spite of that, again, we had a fantastic baseline ratio of 77-23 in favor of annual to monthly.
Interesting. Okay.
So again, like people were, again, that was not, it's pretty good pretty good by any benchmark that you see out there. But then as we were expanding to these newer markets, so we were expanding geographically, adding more markets and trying to acquire customers in newer markets. It's completely understandable that in newer markets, people would prefer to try the monthly plans because they're not sure about who we are, don't fully understand the value of the product yet. There's not sufficient mass of people, of users. So we came up with this other experiment saying, why can't we make the discount on an annual plan much better than it is right now? So 8.33% is not much of a discount. And so we went really sharp and we had to do some little Excel magic there to come up with, so we finally landed with 9 times monthly price without dropping the annual price. So we basically had to increase the monthly price. So on average, we increased monthly prices by about 25% so that the annual plan would get a 25% discount over paying 12 monthly invoices.
Interesting. Okay.
And again, really happy to note that also worked in favor. So again, the success criteria was not below the current baseline. So we didn't want to adversely impact what was going to happen to conversions and also conversion to yearly plans. And as we made the incentive to upgrade to annual plans better, we got some really good success in some of our newer markets to convert more people to annual plans as well. That also worked out in our favor.
Yeah, I think that's also a really interesting approach in terms of, instead of just discounting, like slashing the price of the monthly plan for an annual discount, instead increasing the pricing for the monthly plan to then make the discount feel larger for the annual plan. I think that's also a smart move. People that were currently on monthly plans, on the original monthly pricing, did you like grandfather them and keep them on the same pricing and then offer an incentive to upgrade to annual? Is that how you guys set things up?
So we did. So we've kept them on their old plans, because by the time we came to the success of this particular experiment, COVID hit, and it would be inhuman to
you didn't want to
raise prices at this time.
Yeah.
So yeah, we're just holding them on their original prices for now. But all new payers are on the newer plans.
I think that's a really interesting experiment for people listening to this to think about, because people always want those annual plans, right? Because of the cash flow that you mentioned earlier on. But sometimes people struggle to think, oh, why would I discount my pricing so heavily? But taking the approach that you took, it doesn't really make it, like, it makes it feel like a discount to the end user, but to you guys, it's not a significant loss. It's actually beneficial. So yeah, I think that's a really interesting approach. Okay. I think we'll start to wrap things up here because you've shared some extremely useful insights. And I think the one significant learning point for me from this episode too is that this will give people a number of different ideas and approaches that they can experiment with when it comes to their conversion from free user to paying customer, trial user to paying customer, but also when making switches to try and incentivize annual plans. And I know that's something that's on the top of mind for so many people that listen to this show. So thank you for coming on and sharing that. Before we wrap up, I just want to ask you two fairly quick, not super quick fire, but two fairly quick questions. So the first one is, what's one thing that you guys are finding like most challenging as a marketing team right now? What's something where you're putting a lot of your attention and focus on at the moment?
Yeah, great question again, Dylan. So we are based in Australia and New Zealand, but our customers are anywhere. So we actually have about 100 different countries where we have paying customers now. And what that means is we don't have local knowledge of this industry, of investing terms, and even though it's English across the globe, but there are certain nuances that are called different things, and so on. So definitely international expansion is something that we spend a lot of time on. As simple as setting up even an AdWords campaign. Should it be a campaign or should it be an ad group? And should we allocate budget by country or should we allocate budget based on demand? So lots of challenges on the international expansion. We're having some really good success in a lot of markets. So definitely in North American markets, in US, Canada, and as well as in the UK. So primarily the English-speaking markets, as well as these like financial hubs like Singapore, Hong Kong, and so early success in these places, but also all across Europe. We definitely can't have people on the ground everywhere. One of the channels that we set up in Australia and New Zealand over a year and a bit ago, that's starting to really ramp up well, is the affiliate channel. And yeah, we in our terms, an affiliate is really an influencer, but also gets paid only on success. So we're after financial bloggers, people who blog about investments, who talk about investing and the common topics. So we've had some really good success locally here. The challenge is, how do we find such people,
more of these people, right?
More of these people globally. And again, one of the conditions under which we let an affiliate in is they need to be a user of our product already.
That's actually that's a really interesting point, because I was going to ask what's one thing that's working well for you guys, but I think that's that covered. And I would recommend for the affiliate marketing side of things too. I know that you listened to the episode we did recently with the guy from ClickFunnels with they're talking about their affiliate program. We also did an episode all about affiliates at the very kind of beginning. I think it was maybe the 4th or 5th episode of the podcast with a company called Bonjoro, because they see very good success from their affiliate marketing program too. So anyone like listening to this, if they want to learn more about affiliate marketing, I would recommend going and checking out those previous episodes. I think we'll wrap things up there, but thank you so much for coming on today, Prashant. I really appreciate you sharing kind of some things that are working really well for the team at Sharesight. It's been really good to meet you and get to know you. So thank you. And yeah, thanks for sharing some really valuable advice with everybody today.
Likewise. Thanks a lot, Dylan. Really enjoyed it.